Yeah, so I think there are three big forces to keep your eye on. And when you see them in their cycle, then it's clear. First, are you earning more than you are spending?
And do you want people to look at this at an individual level or at a country level?
Well, you can at both. I want them to look at it as the country, but the country's nothing more than the aggregate of the people. And so when you look at those three forces, I want to make sure that they're clear and you could align them up and you could see where you are. Is the country earning more than it's spending and building savings, or is it spending more than it is earning and creating debt? Because one man's debts are another man's assets. And when somebody is holding those assets and they're producing a lot more of that money in debt.
When a billionaire investor who predicted the 2008 financial crash tells you that 98% of people don't know how to survive what's coming, you'd better pay attention. Ray Dalio, founder of the world's largest hedge fund, isn't known for sensationalism. So when he warns that only 2% of people understand how to protect themselves from the zero approaching economic storm, it's worth asking, are you in that 2%? Ray Dalio's track record speaks volumes. This is the man who built Bridgewater Associates into a $150 billion empire by understanding economic cycles better than almost anyone alive. He saw the 2008 crisis coming when others were drunk on subprime mortgage euphoria. Now he's sounding the alarm again, and his message is stark. The vast majority of people are walking blindly toward a financial cliff. What makes Dalio's warning particularly chilling isn't just his credibility. It's the specificity of his concern. He's not talking about a typical recession or market correction. He's describing a perfect storm of debt, inflation, political polarization, and global conflict that threatens to reshape the economic landscape as we know it. And according to him, only 2% of people have the knowledge and preparation to navigate what's ahead. To comprehend why Dalio believes 98% are unprepared, you need to understand his framework for economic cycles. Dalio identifies patterns that repeat throughout history, particularly what he calls the big debt cycle.
And then that gets people bad returns, it produces a higher amount of inflation, and it produces bad returns for holding debt or bonds. So in other words, cash or bonds, and then people get out of cash and bonds, and that produces rising interest rates while there's rising inflation, and that produces stagflation. So I want them to get the mechanics of that, because that's happening now. You could see it. This is not controversial.
We're currently in the late stages of this cycle, characterized by massive government debt reaching unsustainable levels. The U.S. national debt now exceeds $33 trillion, a figure that was unimaginable just decades ago. Central banks have printed money at unprecedented rates, leading to currency debasement that erodes purchasing power. Interest rates, after being near zero for years, are now rising rapidly, making debt servicing increasingly painful for governments, corporations, and individuals alike. This isn't just economic theory, it's the reality unfolding before our eyes. The warning signs are everywhere. Persistent inflation despite central bank efforts, widening wealth gaps creating social tension, and geopolitical conflicts threatening global trade and cooperation. These aren't isolated issues, they're interconnected symptoms of a system under extreme stress. The 98% trap, why most people are vulnerable. The harsh truth is that most people operate within a financial paradigm that worked in the past but may prove disastrous in the coming environment. The 98% Dalio references are those who keep most of their wealth in cash, unaware that inflation is silently destroying its value. They assume that what worked for their parents' generation, saving money in banks, buying bonds, working a stable job, will work for them. They lack diversification across asset classes and geographical regions. They have no hedge against currency devaluation or systemic risk. The traditional financial advice of the past, save money, buy a house, invest in a 401k, was designed for a different era. In a world of negative real interest rates and currency debasement, these strategies may actually increase vulnerability rather than provide security. Consider this. If inflation runs at 5% and your savings account pays 1%, you're losing 4% of purchasing power annually. Over a decade, that's a 40% erosion of wealth, even though the number in your account appears stable. This is the silent theft that most people don't see coming. The 2% solution, Dalio's framework for survival. So, what do the 2% know that others don't? According to Dalio, they understand several critical principles. All-weather portfolio construction. The prepared minority doesn't bet on a single economic scenario. They build portfolios designed to perform reasonably well in multiple environments: growth, recession, inflation, or deflation. This means owning assets that behave differently under various conditions. Real asset allocation. While the 98% hold paper assets vulnerable to debasement, the 2% own real assets that maintain value. This includes gold, commodities, real estate, and stocks in companies with pricing power. These assets serve as inflation hedges and stores of value when currencies lose purchasing power. Geographic diversification. The prepared few don't keep all their eggs in one country's basket. They understand that economic crises often trigger capital controls, currency devaluations, and asset confiscations. By spreading assets internationally, they reduce single jurisdiction risk. Understanding of history. Perhaps most importantly, the 2% study financial history. They know that currency debasements, debt crises, and economic upheavals are recurring phenomena. By understanding past patterns, they can better prepare for future scenarios. Practical steps to join the 2%. Moving from the vulnerable majority to the prepared minority requires specific actions. First, emergency preparedness. Before investing, ensure you have 6 to 12 months of expenses in a combination of cash and precious metals. This isn't about doomsday prepping. It's about having flexibility when systems are stressed. Second, inflation protection. Allocate a portion of your portfolio to assets that historically perform well during inflationary periods. This might include Treasury inflation-protected securities, TIPS, commodity ETFs, or stocks and companies with strong pricing power. Third, currency diversification. Don't hold all your wealth in a single currency. Consider holding some assets in Swiss francs, Singapore dollars, or other historically stable currencies. Cryptocurrency, despite its volatility, may also serve as a hedge against fiat currency debasement. Fourth, skill development. The ultimate hedge against economic uncertainty is your ability to provide value. Invest in skills that remain valuable regardless of economic conditions. The 2% understand that human capital is often the most resilient asset. Fifth, debt management. In an environment of rising rates and economic uncertainty, excessive leverage becomes increasingly dangerous. The prepared minority maintains modest debt levels and avoids variable rate obligations. Perhaps the biggest obstacle preventing people from joining the 2% isn't lack of information, it's psychology. Humans are wired for normalcy bias, the tendency to assume that things will continue as they always have. Breaking free from this bias requires actively challenging your assumptions about economic stability. The 98% find comfort in following the crowd, even when the crowd is heading toward a cliff. They'd rather be wrong with everyone else than risk being right alone. The 2% accept the discomfort of thinking differently because they understand that extraordinary circumstances require extraordinary measures. This psychological shift is perhaps the most crucial element of Dalio's message. It's not enough to intellectually understand the risks. You must be willing to act on that understanding, even when it means departing from conventional wisdom. Time may be the scarcest resource in this equation. Economic cycles move slowly until they don't. The transition from stability to crisis can happen with surprising speed, as history repeatedly demonstrates. Those who wait for complete certainty before acting often find themselves acting too late. Dalio's warning isn't about spreading fear. It's about spreading awareness while there's still time to prepare. The difference between the 2% and the 98% isn't necessarily intelligence or wealth. It's the willingness to see uncomfortable truths and act accordingly. The question isn't whether challenges are coming. Even the most optimistic economists acknowledge headwinds ahead. The question is whether you'll be among the prepared few or the surprised many. Ray Dalio has provided the framework. The choice of what to do with it rests with each individual. In the end, joining the 2% isn't about predicting the future with certainty. It's about preparing for multiple possibilities with wisdom. It's about building resilience into your financial life so that regardless of which scenario unfolds, you're positioned not just to survive, but to potentially thrive. The storm Dalio warns about may arrive sooner or later than expected. It may be more or less severe than anticipated, but those who heed his warning and take action, those who join the 2%, will face whatever comes with far greater confidence and capability than those who chose to hope for the best while preparing for nothing at all. The choice is yours. Remain with the 98% and hope that this time is different, or join the 2% who understand that hope is not a strategy and preparation is not paranoia. It's prudence.